So I have a gentleman that I'm friends with. He's a colleague of mine. He owns a wealth management firm similar to mine, but his investment strategy is all active, whereas mine is all passive. So he's very much into security selection, asset allocation shifts. And as I was starting my firm and I was reading all the research and I was trying to figure out like what type of investment management strategy I was going to deploy, he posted an article in 2021 called "A Shot Across the Bow." Has anybody ever heard of the term "the shot across the bow"? So it's a naval term. It is a naval term that means basically like a warning shot. So if you shoot across the bow of a ship, you're like basically saying like, hey, don't move any further. Like you're kind of like saying, I could kill you, but so it's a warning shot, right? It's a naval term. So he writes this article called "A Shot Across the Bow." And he talks about why, in his opinion, the market is overvalued and that investors should either, lower their stock purchasing, stop purchasing stock, shift to bonds. And then in the very, very end, his last suggestion is, if you're really concerned about the market being overvalued, you should sell your stocks and move to cash and wait until the storm, so to speak, ends. So I remember reading that and being like, wow, that's really interesting. Because at that time, and I pulled up the charts, in 2020, the pandemic happened. Everybody thought that the market was going to tank. They're like, all these things are shutting down. There's going to be no purchasing. People are going to be strapped for money. They lost their jobs. However, the market, at least the S&P 500 as a proxy for the market, performed 16.25% that year. Basically the exact opposite of what everybody thought was going to happen. So COVID happens. People think the market's going to go down. Quite the opposite. So then heading into 2021, still no correction from COVID. He writes this, I think it was like in April. The S&P 500 goes on that year to perform 26.8%. 26.8%. I don't know exactly where that performance fell in the year, if it was front-loaded or back-loaded, but if you would have read that article and taken that advice to sell your stocks, you would have missed out on 26.8% in performance. So that is why tactical asset allocation shifts are very, very hard to time, because it was not until 2022 that the market finally corrected prices from COVID and drew back 19.4%. But you still would have been good and positive even through that year had you held on to your stock position.